The UK Stock Exchange continues to be an open market for global investors,
particularly for those who are looking for opportunities to participate in takeover bids for UK-listed companies.
In the last 3 years, more than half of firm takeover offers were made by international bidders, and of those, over 40% involved consortium deals or financial acquirers.
This illustrates that, as an alternative to taking a primary role on a bid as a bidder, it's also very possible for global investors to participate in bids in a secondary role.
This would be either as a member of a bidding consortium, which is fronted by a lead bidder, or through providing debt or equity financing upfront or during the bid in a syndication phase.
For investors who are looking to play that type of secondary role, it is still critical to take advice on the regulatory framework for takeovers in the UK and the specific rules and considerations that apply under the UK Takeover Code to these situations.
For example, the UK Takeover Panel is very different to most other global regulators. It's very proactive, it expects a constant dialogue from participants in a bid process, and it will give you real-time guidance in return. Therefore, you do need advisors who can take a very interactive role and can help you navigate through this heavily regulated environment.
The Takeover Panel aggregates everyone who acts together as a single group, which is known as acting in concert. This means that any action by you will also be considered as an action by the lead bidder.
This can have quite serious consequences. For example, if you buy shares in the target, the bidder will be subject to minimum pricing requirements for the deal. To help with this, you will need to put in place confidentiality, standstill, and other arrangements on conduct for the life of the bid.
Everything you say publicly about a transaction will be regulated, and you will be held to what you say. For example, parties cannot make statements about a shareholder's support for a deal unless those statements are verified, and that will normally include the shareholder publicly confirming their support in writing.
All information that the target company produces is also regulated. The lead bidder will receive due diligence information, but it is often lighter touch than in private processes, and there isn't an opportunity to make lots of new requests on behalf of secondary investors.
It is therefore important to make any critical due diligence requests clear to the lead bidder as early as possible in the process, and also to ensure that NDAs have been set up correctly, either to allow the lead bidder to onward share all information that it receives to you, or to allow you to receive information such as VDR access directly from the target.
If you are committing funds to a deal up front, these funds will need to be cash confirmed. Essentially, this means having those monies confirmed by the bidder's financial advisor as being available, committed, and ready to deploy as early as the first announcement.
Importantly, this requirement does not apply to any funding that is committed post the deal announcement through syndication.
You will need to be ready to do 2 deals at once, both participating in the underlying takeover bid, but also negotiating the private shareholder arrangements or debt financing arrangements that will be in place going forward. This can be very involved in the context of a public process.
The UK Stock Exchange remains a vibrant arena for global investors, particularly in takeover bids. However, navigating the UK regulatory landscape, especially under the UK Takeover Code, requires careful attention.